Hello, we are Group 2 with 4 members, Tuyen, Thông, Nguyên, and Duy. And today our group will talk about analyzing the financial statements of Hòa Phát Group joint stock companies. This is a table of content consisting of 5 main parts. And first, I will briefly introduce about Hòa Phát Group joint stock companies. The companies were established in August 1992, and it is a leading industrial productions group in Vietnam. Initially, the companies focused on trading construction machines and then expanded to the other fields. The groups officially listed shares with the stock cost HB3 and conducted an IPO on HOSE on November 15, 2007. Currently, the groups operates in 5 fields: iron and steel, steel products, agriculture, real estate, and electrical appliances, with 90% of the revenues and profits from steel productions. And Hòa Phát Group has 11 members companies operating nationwide and an office in Singapore. Regarding the compositions of the board of directors, Mr. Trần Đình Long is the chairman of the board of directors and is also the holder of the most shares. And then the general directors is Mr. Nguyễn Việt Thắng. And finally, the positions of vice chairmen is Mr. Trần Tuấn Dương and Mr. Đoàn Gia Cường. Let's move on to the competitors of Hòa Phát is Hoa Sen Group joint stock companies established on August 8, 2001. This group has actively contributed to changing the face of the country's architectures and developing the communities. Moreover, the company goals is to become a leading economic groups in Vietnam and the domestic region in terms of manufacturing and distributing building material products. And the company's registers to list share with stock cost HS3 at HOSE. And then Tom will talk about the balance sheets of Hòa Phát companies.
Okay, to have more clear insights about into the financial aspects of Hòa Phát corporations, let me interview briefly about its component with attractive change related to the balance sheet. First, which will be covered in 2 parts: the overview and the comparison to the direct competitor Hoa Sen Enterprise. And the sheet here sum up the Hòa Phát operation over the 4 years. And through this snapshot, we can easily keep track of a whole picture of Hòa Phát Corporation, specifically by the 4 main aspects: current assets, non-current assets, liability, and equity. And from the period 2017 to 2018, the current assets was the only component that possessed a downward trend. The main cause of the decrease in Hòa Phát current assets was the huge spending on procurement, construction of fixed assets, especially the Dung Quất Steel Complex as the first phase in 2018. Besides, the dramatic growth of the non-current assets, which was by 165%, is one of the outstanding events of Hòa Phát in 2018. This is led by the 70% completed Dung Quất construction and simultaneously increased the steeply long-term assets in progress. Hòa Phát also experienced a sharp increase of 82% in its liabilities to invest in its Dung Quất projects. For the period of the next 3 years, from 2018 to 2020, all 4 Hòa Phát aspects had upward trends, which reflected the effective development of the Hòa Phát operations. And the comparison with the competitor will help us to possess a more actual case through these 2-part chart. It is clear that Hoa Sen Corporate mostly has a higher common size of the current assets compared with Hòa Phát. And the first bar chart illustrates the same trends for both companies, which decrease the current assets over the first 3 years from 2017 to 2019 and go up the next year in 2020. And while the Hoa Sen remain to balance its current assets and non-current assets, Hòa Phát possesses more fluctuate ratio components in its current assets and non-current assets, and which play a key role in the last 3 years as well. The third chart presents how Hòa Phát and Hoa Sen liability account in their total liabilities and equity size. The reverse trends can be seen from both companies. While Hòa Phát liability common size grow up over time, Hoa Sen has a downward trend, although this change in common size is insignificant. This Hòa Phát trend also reflects that the company gradually increased the abilities to pay interest costs. Because both revenue and profit of Hòa Phát in 2020 grew strongly compared to in 2019, the interest coverage ratio was still high at 8 times. That means Hòa Phát can afford to pay interest costs 8 times higher than the present point. And according to the last bar chart, it is demonstrated that the stockholder equity of both Hòa Phát and Hoa Sen gradually returned to the balance ratio in the common size from the balance sheet, although in 2020. The Hòa Phát stockholder equity goes down moderately from 61% to 45% over the 4 years, while Hoa Sen stockholder equity has a reverse trend that grow up by 13% and reach a peak at 37 in 2020. And about more information about the income statement analysis, Nguyên will help us to figure out.
So I will talk about income statement of the companies. Hòa Phát total revenues increased dramatically. The company's focuses on investing in the factories, production, and business capacities, and optimally use capital to borrow more money to increase profits. Next is operating profits. Although it increased slightly from 2018 to 2019, and then increased sharply in 2020, up by about 69% from the previous figures. This is because Hòa Phát may be affected by the COVID-19 pandemic. However, its spike in 2020 demonstrates the company's attempt to be less dependent on the market. Let's move on. Hòa Phát cost and goods sold continuously increased from 2017 to 2020, increasing by nearly 100%. This is because the growth of production costs. Next slide, please. There was a significant data increase in the company's operating expense from 2018 to 2020. It means that Hòa Phát was able to manage operating costs effectively. And in 2020, Hòa Phát total operating costs reaches the highest level. Next is about non-operating profits loss decreased from 2017 to 2018. These figures increased significantly in 2019 and then almost unchanged in the following years. It can be seen that Hòa Phát still has to bear a large non-operating expense, even though the group has made profits when non-operating income is higher than non-operating expense. And finally, about earnings per share. Overall, the company's earnings per share experienced a downward trend from 2018 to 2020. And we will talk about the next part.
Thank you, Wing, for introducing me. Hi, my name is B, and I'm the next speaker of Group 2. It is my part that I will compare the income statement between two companies, Hòa Phát and Hoa Sen. In terms of total revenue, Hòa Phát was more efficient than Hoa Sen as the company generated more and witnessed an upward trend during the period. Hòa Phát revenues outweighed that of Hoa Sen as it was approximately 1.33 to 3.3 times higher. And the difference between two total revenues were around 20 to 63,000 billion dong in 2017 and 2020. It is inferred from the bar chart that there was enormous difference between the operating profit of two companies. Hòa Phát operating profit was above 9,000 billion dong and almost reaches 15.3 billion dong in 2020, 21.1 to 37.6 times higher than that of Hussein. The operating profit of Perfect generally represent about 17% of the total revenue, while that number of Hussein was only 3.3%. Perfect witnessed an annual increase in cost of goods sold in this period at around 24% increase throughout the year. Meanwhile, the competitor of the company, Hussein, kept the cost around 20 to 30,000 million dollars in this period. Overall, Perfect spent more capital than Hussein for inputs in this period. However, when analyzing the index along with the total revenue, cost of goods sold of Perfect accounts for a smaller part in the total revenue than that of Hussein. And the cost of goods sold of Hussein nearly reached 90% of the total revenue in 2019. From 2017 to 2020, Hussein operating expense fluctuated between 2.9 thousand billion dollars and 3.6 thousand billion dollars, while Perfect purchase on this expense significantly increased throughout the period. The highest increase was witnessed between the 2020 of around 75%. Perfect operating expense was also well managed, as it kept no more than 5% of the total revenue, and while the expenditure of Hussein exceeded 10% in this period. For most of the years in this period, Hussein well managed non-operating activities as the company gained around 63 billion dollars in 2017 and 2018. This number even skyrocketed to 222 billion dollars in 2019, but then declined significantly to minus 3 billion dollars in 2020. On the other hand, Perfect operating gains decreased in the first 2 years, but then witnessed a gradual increase in the last 2 years, 2019 and 2020. About earnings per share, the project illustrated there was a similar trend between two countries. It was a downward trend in the first 3 years and a significant increase in the very last year, 2020. The index from two companies witnessed a decline from about 3,000 Vietnam dong to only 2,000 Vietnam dong and 3.6 Vietnam dong to only 800 Vietnam dong, but then witnessed the same increase in the very last year. And next, we will talk about the ratio analysis from Tuyen.
Hi everyone, I'm Tuyen and I'm continue our presentation with part 3. The part 3 is the ratio analysis, including the liquidity ratio, leverage ratio, efficiency ratio, and profitability and market value ratios. Come to the liquidity ratio. The first ratio is the current ratio. The higher current ratio, the more likely a company is to pay its short-term liability. Between 2017 to 2020, although the current ratio of Perfect experienced a slight decrease, it was still greater than 1. In comparison with Hussein, Perfect was more likely to pay its current liability with its current asset. The second ratio is the quick ratio. The higher the ratio, the more likely a company is to pay debt with its most liquid asset. Perfect data was higher than Hussein despite a huge drop in the middle of the period. The third ratio is the cash ratio, which is similar to the previous ratio, but it sticks to the cash and near cash assets. The ratio of Perfect was lower than 1, meaning that the effective assets utilization to generate profit, while the very low ratio of Hussein was explained by the large financial leverage and huge loss from income. The second factor is the financial leverage. Equity multiplier are used to analyze. Perfect has focused on issuing stock for Yungbuk project, leading to an increased trend in its data. In total, Perfect has a low level of financial leverage than Hussein had. About the asset management, the day sales in the inventory measure the days taken to sell a company inventory. The chart show that Hòa Phát need more days to sell its inventory than Hoa Sen did. And the day sale in account receivable measure how long it takes to collect on sales. The chart show that it took Hòa Phát. Next slide, please. It took Hòa Phát more days to collect sale than Hoa Sen despite its sales growth in 2019. But we can imply that Hòa Phát has improved account receivable management because of its decreasing trend. The final one is the total asset turnover. The gradual decrease was seen by Hòa Phát Group and lower than Hoa Sen. This was explained by the large asset purchase for the huge project of Hòa Phát. Next, about the Hòa Phát profitability, return on asset and return on equity of both companies are depicted in the bar chart. The total drop during the period for own data was caused by the COVID-19 pandemic. Compared to the to Hoa Sen Group, return on asset of Hòa Phát was higher. It means that Hòa Phát more effectively use asset to generate returns. Return on equity of Hòa Phát also decreased and reached its bottom in 2019 before going up in 2020, while the return on equity of Hoa Sen fluctuated and more lower than Hòa Phát in 2020. Taking two-point analysis to deeply understand the decreasing trend in return on equity of Hòa Phát. After our analysis from the table, we conclude that the quickness from operating efficiency lead to the decrease in return on equity of Hòa Phát. In addition, the huge difference between return on equity of both companies was resulted by the huge change in the net profit margins and the leverage level. Finally, the market value. While Hoa Sen saw a fluctuated trend, Hòa Phát gradually decreased during the same period. However, the data of Hòa Phát still maintained a acceptable ratio in the steel industry as a whole. To sum up, Hòa Phát was highly valued in the market and outperformed its competitor like Hoa Sen Group because of its highly sustainable development. Next, we will conclude our presentation.
Yes, thank you, Jane, for the detailed ratio analysis. It is my part to conclude our financial analysis. Overall, Hòa Phát Group is one of the pioneers in many industries such as iron, steel, agriculture, and even real estate. One of the company's biggest competitors is Hoa Sen Group. By analyzing the balance sheets and the income statement of the two companies, as well as the ratios, it is indicate that Hòa Phát is operating better than its competitor. The flourishing business conditions from the financial statement and the strength gained from ratio analysis have clearly proved that Hòa Phát Group is a safe play for both short-term and long-term investors. To conclude, Hòa Phát Group has the capabilities to develop and maintain its current positions on the market. Here is our reference list. And thank you for listening.